Worried about where the market's headed after today's wild swings? You're not alone. Let's break down what really moved the S&P, Nasdaq, and Dow on April 23rd. Plus, I'll walk you through exactly what I'm watching for the next trading day. Alright, let's talk about what went down today. The S&P 500 closed just barely green, up 0.14%, after whipsawing all session long. A mix of earnings beats and some late-day dip buying gave it a soft landing. Nasdaq Tech tried to carry the load again, but it didn't have enough fuel. It ended flat, down just a hair, around 0.03%. Traders were clearly torn between piling into AI names and profit-taking after last week's monster rally. And the Dow Jones, that old-school index, lagged a bit today, falling 0.26%. Defensive stocks like Procter & Gamble and Johnson & Johnson dragged the Dow lower as traders rotated out of staples and into more speculative corners of the market. Let's break down some key names. Tesla, TSLA, got a boost, finally. It rallied over 5% after Elon Musk teased a big announcement related to full self-driving. No details, of course, but the market loves a good headline. On the flip side, Verizon, VZ, got hammered, down 7.2%, after weak Q1 subscriber growth and some not-so-great forward guidance. That weighed on the telecom sector across the board. Nvidia, NVDA, held steady despite heavy volume. No fireworks today, but it's still sitting near breakout territory. Keep this one on your radar. We also got a big data print this morning. April's flash PMI came in hotter than expected, 54.9 versus the 52.3 consensus. That spooked bond markets and had yields climbing fast, which put pressure on growth stocks early on. And yep, Fed Governor Michelle Bowman spoke at a policy forum. Nothing groundbreaking, but she doubled down on the higher for longer message and hinted that inflation's stickier than they'd like. Markets didn't love that. Let's get into the charts. The S&P 500 is stuck between two key levels right now, support at 5,000 and resistance at 5,160. Today's bounce off the 50-day moving average is promising, but it needs volume to confirm. Over in the Nasdaq, the 17,000 mark is acting like a ceiling. We saw unusual volume in Palantir, PLTR, and AMD, suggesting institutions are positioning for a breakout, or a breakdown. And here's one you might have missed, Marathon Oil, RO, popped on 3x average volume. No news, just a huge energy block trade. Could be a signal something's brewing in oil names. Sector-wise, energy led the pack today, up over 1.5%, thanks to oil prices pushing above $86 a barrel. Financials also held their own, especially regional banks, which caught a small bid after a quiet couple of weeks. But consumer staples. Ugly. That group was the biggest laggard, dragged lower by weak earnings from Kimberly-Clark and a downgrade on Coca-Cola. So, where do we go from here? Honestly, this market feels like it's coiled. We've had some solid earnings, strong data, but not enough conviction either way. I'm watching volume closely, especially in tech and energy, and keeping a tight leash on trades. The next catalyst could be Friday's PCE inflation number, but tomorrow? It's all about earnings from Meta and Microsoft. One surprise either way could set the tone for the rest of the week. My call. If we see follow-through volume in tech, we might get that Nasdaq breakout by Thursday. But if yields keep rising, watch for a quick rotation back into value. Hey, if you got value from this, do me a favor. Like the video, drop a comment with your top stock to watch tomorrow, and don't forget to subscribe for real, human market breakdowns every trading day. No fluff. Just facts and what matters to traders like us. I'll catch you in the next one. Trade smart, stay sharp.